Hello. Before we start today's video, just a quick note that if you are interested in purchasing the Stocks ETFS Daily Key Levels Indicator, you can email us at daytradinggps@gmail.com to request a discount promo code. So in return for you taking your time to watch this video today, you can simply send us an email at daytradinggps@gmail.com to request a discount promo code for the Stocks ETFs Daily Key Levels Indicator, and we will send you a promo code that will give you a substantial discount off of the regular price. Thank you. Hello, in today's video we'll be taking a look at the Friday, October 31st, 2025 trading session for Apple stock. We'll be utilizing the Day Trading GPS Stocks ETFs Daily Key Levels Indicator for trading Apple stock options. Okay, so you may be familiar with our daily key levels indicators. You may have seen some of our other videos on this YouTube channel regarding our SPX index daily key levels indicator, but today's video is going to be on our other daily key levels indicator, that is for stocks and ETFs. So this particular indicator can be used for all stocks and ETFs that are listed on U.S. stock exchanges, specifically these four exchanges: the New York Stock Exchange, the NYSE, the NASDAQ Exchange, the over-the-counter, the OTC, and also the American Stock Exchange, the Amex. So you can use it both on large cap, mid cap, small cap, and micro cap stocks, as well as a wide variety of ETFs. Now, some of you may already be familiar with how our daily key levels indicator works. You may have seen our other daily key levels indicator that we have shown quite frequently on this channel, the SPX one, but you may not be familiar with how this stocks ETFs indicator works, or you may be new to this channel and have never seen any of our daily key levels videos. So I will take some time now to go over how this indicator works so everyone can understand that, and then we'll move on to today's session. We'll also be taking a look at the option charts. Specifically, right now we're looking at the stock chart, but later on we will look at the Thinkorswim stock option charts, so we can look at all the validations of all the prices at different levels and at different timestamps. Okay, so to start off with, like I said, at 9 a.m. Eastern on most of your widely popular stocks and ETFs, you will get these levels on your chart. So that is occurring 30 minutes before the New York Open, the New York RTH session open, which occurs at 9:30 a.m. Eastern New York time. The most important level that will be on your chart is this bull bear KPL level. So for Apple stock today, 10/31/2025, that level given by the indicator for today's session is 276.88. So this is the all-important bull bear key price point pivot for today's session. So bullish above this level and bearish below this level. Generally, in about 95% of the sessions that you'll see, this level will be the level that you'll be trading from in the early moments of the session. Now, sometimes you will see where price will gap way above this level or way below this level. And we do have a video that is on, that was made with the SPX Daily Key Levels Indicator that outlines candles that you would want to avoid on the 9:30 open as far as trading off of the bull bear key price level and how to recognize those. And but that does not happen that often, but when it does happen, it is important for you to know when using this indicator when to avoid the 9:30 a.m. opening candle trade on the bull bear KPL and how to recognize that. So there is a link to that video. The same principle applies with the Stocks ETFS Daily Key Levels Indicator that is shown in that video with the SPX Daily Key Levels Indicator, specifically for that 9:30 a.m. opening candle. So if you'd like more details, you can go to the description in this video and you'll see the link to that particular video. Okay, so moving on. This is the most important level that you'll get. Now, all of these other levels are key levels as well. So the default levels that you will have on your screen are going to be R1 through R6 and S1 through S6. So those are considered main levels. So the main R levels and main S levels, and then we have the bull bear KPL, which is also a main level. So it's important to understand that with this indicator, you can take bullish or bearish trades off of any of the main levels. So that means the bull bear key price level, as well as any of the main R levels or S levels. We also have a video on taking trades off of the other main R and S levels. That's also found in the description of this video. And that, even though it is using the SPX Daily Key Levels Indicator, the same principle applies with this Daily Key Levels Indicator as well. And that video will also go into detail and discuss the two different types of trade entries with this indicator that you can take off of any main R or S level or the bull bear KPL, and that is a standard trade entry as well as the more conservative trade entry, which requires more confirmations, and how to recognize those on both bullish and bearish trades. So if that's something that you're interested in, we're not going to go into that today. You can also take a look at that particular video. Okay, so I was saying about 95% or more of the session of the 250 or so sessions that you'll have a year, the bull bear key price level in the opening moments, meaning the opening candle and also the opening moments thereafter, the first several candles, are typically going to be based on the bull bear key price level. And so if you're taking a trade off of the bull bear KPL, if you're taking a bullish trade, the main levels above, the R levels above, are going to be your take profit levels for a bullish trade taken off the bull bear KPL. Conversely, the S levels below are going to be your take profit levels on bearish trades taken from the bull bear KPL. You'll also see that we have some of the midpoint lines turned on. So these midpoint lines are the midpoint levels between each of the main levels. As you can see, we don't have every one of them turned on in this particular screenshot, but we do have most of them turned on beneath because this ended up being a bearish bias session. However, if we did have this one turned on, then you would have mid R1, R2 here, and then above R2 you'd have mid R2, R3, etc. Now we do also do not have all of the levels in our screen here, and that's on purpose because when you are first looking at the session at the open, it's best to generally drill down to say R2 to S2 or R3 to S3. And the reason for that is you want to see a more granular view of what is going on. This indicator does allow you to have up to 10 levels above and 10 levels below. So while on most of your large cap, mega cap stocks, you're typically not going to see days that you have 10 level moves. They may happen every now and then on those types of stocks. However, with your lower price stocks, you will see quite often, especially with the pre-market gap up and gap down stocks that may be somewhere between $1 and $10, a lot of those stocks will have extreme moves comparatively speaking, to their price. And so this indicator has up to 10 levels above and 10 levels below for extreme volatility situations, or for situations where you're trading news events on those types of lower end, low float stocks that may be involved in a news cycle of major news of some kind. They may have low float, they may also have very high short interest or other factors, and you'll generally see those kind of stocks in the $1 to 10 or maybe even a $20 range that are just having astronomical intraday moves based on, sometimes it's just market manipulation, but other times it's based on actual significant news of some kind that is either good or bad. So we'll just take a look real quick at those so you can understand which kind I'm talking about. Okay, so for example, when you have the pre-market gainers, you'll have stocks like this here. It's up 65% in the pre-market, low dollar stock, low dollar stock. So you have, on any given day, there's always going to be stocks like that. And there may also be some in the losers section as well. And those kinds of stocks are typically the ones that you would want to use all 10 levels on, because they can move quite a bit, and it's best just to have those levels on. So for those those are the kind of stocks that we're talking about. You just want to make sure that if you're ever looking at trading those kind of stocks, just check what the news may be on that stock before you start looking seriously at trading it, just to go through a couple of checks to make sure that it's not like a buyout or something. Because if it's up on a buyout, that means that it's pretty much, if it's just rumors of a buyout, that's one thing. But if it's an actual buyout and that's the reason that it's up, then it's pretty much just going to be arbitraged after that, and maybe it might move some, but it's not just a free for all situation like you would have in a normal big news short squeeze or some kind of monster sell-off due to other types of fraud or other types of really bad news or something like that. So just make sure that if you are into trading those types of lower dollar stocks, you just go through a couple of checks when you're checking these, just to make sure that you're not you understand what the news is that may be behind what this pre-market gain or pre-market loss to the extreme is actually about. Okay, so with that in mind, now I'm got you on a chart of Apple. This is a 1 hour chart, and this was taken at 9:25 this morning, so the levels would have already been out since 9 o'clock. And so with Apple, you had earnings yesterday that came out after the close on Thursday, and we had quite a reaction to the earnings. As you can see, this is this hourly candle here, where it sold all the way down to about 261 almost, and then all the way up to about 285. So that is quite a move for Apple stock. Even on earnings, it generally will not make that kind of a range move after earnings. So this is kind of an extreme for Apple. So with it basically soaring up to all-time highs here on this earnings news, we were looking for a very high volatility day today. So this is what it looked like before the market opened at 9:30, and as you can see, I have all 10 levels turned on here just to get a more overall view and also have it on an hourly chart. So this indicator, unlike the SPX indicator, which only works up to 30-minute chart time frames, the Stocks ETFS Daily Key Levels indicator works up to 1 hour chart time frames. So this works on chart time frames from 1 minute to 1 hour, whereas the SPX Daily Key Levels indicator only works on chart time frames of 1 minute to 30 minutes. So when you get a 30-minute jump on the levels here and you get them at 9 a.m., it's also a good idea to look at an expanded chart on a longer time frame such as this, especially if you have a significant move of this kind, so you can get a more overall view, perspective of what exactly has been going on in the recent couple of weeks. Just from a price action perspective. Okay, so just trying to show you here, like this would be the look with 10 levels. Now we're just going to go back to the other chart. Okay, so as you can see here on this chart, we've drilled down to a 1 minute chart. So we're expecting some pretty fast and furious action today with the context of the background of the earnings and the substantial move up from yesterday's close after earnings. So either we're going to get quite a short squeeze at the open, or we're going to get a significant sell-off at the open. I do not expect this stock just to be flat after making that kind of a move. So usually when stuff like that happens, you'll have kind of a monster move initially in the opening moments of a session, at least, until it finds its footing as to where the market makers want the stock basically to settle out at. So in this case, we're looking for significant opportunity, either bullish or bearish today. So today we got a bearish opportunity right at the open. But let me go ahead and just finish explaining the midpoint levels. Okay, so as we said, the midpoint levels are the levels between the main levels. So these you can turn on in the user control panel and enable them for any of the levels. This indicator offers a wide array of different display customization features that we're not actually displaying them in this particular video today, but there are a lot of different customization display features and other features that we're not going to get into today that this indicator offers. And we do have a video that goes over the complete setup and features video, which also goes over all the inputs and every other aspect of this indicator. And you can look at that in the description of this video as well. We have a link to that in the description of this video, along with videos on other topics. So if that's something of interest to you to look at, you have an interest in seeing all the different inputs and features of the indicator, that you can certainly go look at that particular video. Okay, so the midpoints serve a couple of different purposes. So the midpoints are not there to take trades off of, like the main levels. The midpoints can serve as either stop loss levels for bullish and bearish trades off of various levels. They also serve as continuing momentum gauge levels. So closes above a midpoint level, starts to break above, close above, it's generally going to the next main level above. The same thing in reverse. Closes below a midpoint level, it's generally a sign that it is at least going to be going to the next main level below. The midpoint levels also serve as waypoints for decisions for what we term as regular trades. So after your trade has met or exceeded a certain amount of level move in your favor. So there's two different types of trades that you take with this indicator. One is the scalps, and then the other we call regular trades. So on regular trades, the midpoints play key in a couple different ways. One is the midpoints are used engaging the initial 1.5 level move from the level that you're trading, at which time that triggers the different various options as far as exiting or adjusting, as we'll go over here in a second. And then they also become additional waypoints once it's exceeded that for continuing adjustments or exit decisions after that minimum threshold has been met. Okay. One other thing too, these are individually controlled, these line labels. So you can make them smaller or larger, so that they're controlled as a group. So all of the midpoint lines are controlled as a group as far as the size. Right now, these are just on a normal size, and the main labels I have on the large size. There's many different options for those sizes. The point I'm just trying to make is that you can make them all the same size. You can control them individually to make them large or small as you want. There's also an offset for moving them more to the left or right of price action. And then this table here is also a dynamic table. So if you had less levels on display, it should show the levels that you've enabled. If you put all 10, then it would show all 10. You can also move it to different parts of the chart. You can also control the size of this table as well. And you can also control the color scheme of the table. And you can also turn the table off if you wish to not have it on the screen and just go with the line labels only. Okay. So to begin with here, we have the 9:30 a.m. candle. That is this candle here. We're on a 1-minute chart. Now, the ideal time frames to use for this indicator as far as day trading are typically going to be in the 1-minute to 5-minute range. But there are certain strategies where a longer time frame, such as a 10-minute or 15-minute or 30-minute, etc., are useful as well. You have to remember that with our SPX Daily Key Levels indicator, the only situation there is you're either trading SPX index options, because you can't just trade SPX directly like you can SPY or stocks, or you have to be trading SPX through a Forex broker on a Forex CFD. So primarily you have XPX index options. Well, with stocks you can trade the common stock or stocks and ETFs, so you could just trade units, or you can trade, if the particular symbol has options, then obviously you can trade options. Then within options there are lots of different intraday strategies. Some strategies are selling options, some are option combinations. You have straddles, iron condors, butterflies. There's a whole myriad of different option strategies out there. And for some option strategies, a longer chart time frame is more useful than a more drilled down time frame, such as the 1-minute to 5-minute. So you can use this indicator for all those different types of strategies, but just keep in mind that when I speak of the 1-minute to 5-minute chart time frame, I'm talking specifically regarding this particular strategy that we're showing you today, which is basically the same strategy that we use on the SPX Daily Key Levels indicator, and that strategy is for day trading options. And all we're simply doing is buying put options on bearish entry signals and buying call options on bullish entry signals. We're not buying spreads. We're simply just buying straight out options, calls on bullish entry signals and puts on bearish entry signals. So just keep that in mind. And if you do end up buying this indicator, If you use a different strategy in that, or you use, you have a completely different option strategy or a completely different strategy altogether, then just experiment with different chart time frames for find the ideal chart time frame for your particular purpose. But as far as if you're going to be using this particular strategy, it's the 1 minute to 5 minute chart time frame. There's not really going to be a universal chart time frame like you'll see with the SPX. There's a 2 minute chart time frame is the recommended, even though the range is 1 minute to 5 minutes on that. We recommend the 2 minute on that, but you have to remember that's because that's one symbol only, SPX. With stocks and ETFs, it's a little bit different. So you have a range of 1 minute to 5 minutes. Some stocks or ETFs are going to be better on a different time frame between 1 minute and 5 minutes, and some of that just is going to come from you practicing with the indicator over a significant period of time, say on a demo account, before using it on a live account on the specific stocks or ETFs that you trade. Remember, with SPX, there's just one symbol, SPX. With stocks, I mean, there's almost 10,000 stocks between the NYSE, NASDAQ, OTC, and Amex. And then within that, you have, mega cap, large cap, mid cap, small cap, micro cap, and everything in between. And, you have ones that are institutionally traded, ones that are not institutionally traded, ones with high liquidity, ones with medium, ones with low liquidity, ones that have options, ones that don't have options. So the point is that there's just so many different variables that there really is not going to be a one size fits all for every single stock to trade on one unified chart time frame. But you will be able to find a chart time frame that works best between 1 minute and 5 minutes. Generally on your large cap stocks, if they are on high volatility days, then that would be your 1 minute or 2 minute chart time frame typically. But again, all stocks trade kind of their nuances. So the best recommendation I can make to you is that if you do end up getting this indicator, that you try it on a demo account with your strategy on the stocks that you like to trade, and you should practice with it for, it really just depends on how much experience you already have, but a good figure would be 25 to 30 trading sessions. And really that's a good idea with any particular new indicator that you're using. It doesn't matter if you're buying one of our indicators, or you're buying one from LuxAlgo, or you're buying one, or you're getting a free indicator off TradingView and just using that, or whatever indicator you're getting from whatever source. It doesn't matter whether you're paying for it or you're using it or you're getting it for free. If you're using it on a real money account, you have real money at risk, so you need to know what you're doing. And even with the best structured as far as instructions and videos and all that, you still have to use it yourself. And with 25 to 30 practice sessions, most people will be able to become very used to using the indicator on the symbols that they're trading. It may occur faster than that for you. It may occur a little longer than that for you. So everyone's different. You may be fine with just doing it after 10 or 15 sessions, or maybe even 5 sessions. But a good round number, is 25 to 30, generally speaking. So just getting to the point where you've been using the indicator, you've gone through the process of whatever your pre-market process is, and then executing the orders based on the entry signals, executing your trade management of your exits or adjusting your stop losses, managing your trades throughout the session, and recognizing bullish and bearish entries. So, that takes time to get used to become proficient at it, to where it's like second nature to you. Like I said, that may happen in just 5 or 10 sessions for you, but generally speaking, 25 to 30 sessions is a good number. And also because in that time you will see a wide variety of market scenarios sessions. You'll see gap up days, gap down days, you'll see narrow range days, you'll see trending days, up, down. So it's just basically just having a wide gamut of situations that you can practice with it while you're getting used to utilizing the indicator. And like I said, it doesn't matter whether it's our indicator or anyone else's indicator. That's always a good idea to practice with it for a significant amount of time before you start putting real money at risk. So in any event, let's just move on. So on this 9:30 a.m. candle here, as you can see, it tries to push above. We have this wick here. It crosses back below and closes below today's bull bear key price level. So that is your bearish entry signal if you wish to take this 9:30 a.m. trade. And as I was saying earlier in the video, we do have a link to a video in the description of this video which goes over trades to avoid on the 9:30 a.m. opening candle. Those may happen, 5-10 times a year, and so it's important to recognize those trades that on opening candles that do close above or below the bull price level. There are some rules for avoiding those opening 9:30 a.m. candle trades. So you should watch that video, and then you'll get an idea. There's also an accompanying document on a PDF that goes along with that. So it's just important to know that when those actual occurrences happen over the 250 or so trading sessions a year, they don't happen that often, but when they do happen, it's important for you to know that if you're normally inclined to take the 9:30 a.m. opening candle trade, when you should avoid it. Okay, so we have a cross below, close below. If you're going to take this trade on the 9:30 a.m. Opening candle, this is your bearish entry signal. And when you have an entry signal, whether it's bullish or bearish, there's always going to be a couple of strikes that you can take on your option play. With stocks, it's different than with the SPX Daily Key Levels indicator, because that is options only. With stocks, there are people that just trade the common and not options. So if you just trade the stock, you'd be shorting the stock here. However, if you trade options, then you have strikes to consider. So you have to know which strikes. You can't just pick any strike or any put on a bearish play. There are limitations of what you should be able to utilize on a bullish or bearish play with this indicator, and it depends on the level that you're trading from, on the main level that you're trading from, and the bullish or bearish direction of the trade. So in this particular example, this is the level that we're trading from, the bull bear key price level, and we have a bearish entry signal. So the standard play with this indicator for trading options is going to be the closest at the money strike to this bull bear key price level price. So with the SPX indicator, it's pretty simple. It's just one symbol. The strikes are all in 5-point increments as far as the option strikes on SPX, but with stocks, it's all over the place. If a stock has it depends on the price of the stock. It depends on whether it's had stock splits in the past. Sometimes you can get some weird numbers in strikes, especially if it's had, like a 3-for-1 stock split or something odd. And how many they've had. There can be some odd strikes. So what you want to keep in mind is that with this, there's lots of variables. So what you're doing is you want to get the strike price that is closest to this price. In this case, we'd be selecting a put because it's a bearish play. So if you look in the actual options chain, then the closest strike to this is going to be the 277.50 put. So that would be your standard play, the closest at the money strike in the direction that you're trading. Bearish direction, 276.88 price, 277.50 closest at the closest strike. So the 277.50 put. The 277.50 put, the entry price on the close of the candle. Remember, we're waiting for the close of the candle. So we're not entering intra-candle. So whether you have a 5-minute chart, a 3-minute chart, a 2-minute chart, whatever chart time frame that you've settled on, you're waiting for the close of the candle, because this candle very well could have gyrated around and then closed above, and then we'd be looking at a bullish entry signal instead. So you wait till the close. The close on this one, $2.45. Now what about out of the money strikes? Well, there's a limit to what out of the money strikes that you can look at. Some of that is going to depend on the type of stock that it is, how close the strikes are together, and some other factors. Generally speaking, you look in the direction of the trade, and you can look at either the first midpoint in the direction or the first main level in your direction. So here we have mid KPLS1 276.29, and then we also have the S1 275.69. So for this particular trade, as far as an alternative out of the money put strike, you can consider up to one level away. Now, if this was a bullish trade instead, one level away would be the R1 level, so it would be the closest strike to this level. If there was an out of the money strike based on trading bullishly from the bull bear key price level. And it works the same off of every level. So if we were taking a bullish trade off of S2, it's the closest call strike to this number. And then the furthest out of the money call strike that we would consider would be the closest strike to the one level above. If instead this was a bearish play off of S2, it would be the closest put strike to this level. And then our furthest out of the money strike that we could consider on a bearish play from S2 would be the closest strike to S3. And you can also consider the midpoint in between. That's another one that you can consider. But the maximum to consider is one level away in the direction that you're trading. So in this case, one level away, direction we're trading, 275.69 is S1. That's the 275 put. The entry price on the 9:30 a.m. candle close on the 275 put is $1.31. So the standard stop loss, regardless of what strike you're using, at the money or out of the money, the standard stop loss is going to be based on the level that you're trading and the direction that you're trading. So the level that we're trading is the bull bear KPL. The direction we're trading is down. So our stop loss is the first, standard stop loss is the first midpoint above the level we're trading. So that is this midpoint. mid BBKPL R1. If instead this was a bullish play and we had a candle that closed up and this was still going to be the level we're trading, except now where it's a bullish play, then our stop loss on the bullish play is the first midpoint below the level we're trading. And then our out of the money is this. We can consider this, and then this is the at the money as far as a bullish play. Okay, so that is regardless of which strike you're using. Now, the way that your exits work with this particular indicator is, as I mentioned earlier, there are two different types of trades with this indicator. You have a scalp only and a regular trade. Scalp only trades, you're looking for a one level move in your favor to close out 100%. There's no stop loss adjustment. There is no scaling out. There's no other adjustments. It's just 100% closeout, regardless of the position size. So for scaling out, for adjusting stop losses, for doing all these other things that you can do, that is called a regular trade, and that takes at least a 1.5 level move. Now today, things were moving so fast with this, we just basically went through one level move increments. But I will explain how the minimum would have been, and then what your different options would have been as it continued to move down. However, in this particular video, we're just showing the one level move increments for this one today. If you look at our SPX videos on the daily key levels indicator, you'll see where that's more fully explained in the half level increments once it's exceeded a certain minimum threshold. Okay, so going back to the two different types of trades. Scalp only, one level move in your favor. What is a one level move? It's calculated from the level that you're trading from in the direction that you're trading one level. This is the level we're trading. We're trading down one level below is S1. So on the S1 hit, then that's 100% closeout if you're just scalping. The 277.50 put is 340 on the candle close. Remember, we paid 245. The 275 put is 190 on the candle close. We paid 131. So there's your scalp on the candle, on this candle close. At 9:32 a.m., as you can see, this is moving pretty fast here. At 9:32 a.m. play. Here, if you had the S1 to S2 midpoint turned on, that would be a 1.5 level move, and generally that would be your first decision point there for a regular move, minimum required 1.5 level move. Now we don't have that today in this particular video. However, normally that is the case. A 1.5 level move. So when it hits mid S1, S2, that would be your first decision point, the same decision point that you have here on this S2 level. Now a 2-level move is considered the ideal minimum move, whereas the 1.5 level is the absolute minimum required level move for a regular trade. So on the 9:32 a.m. it hits the S2 level. The 277.50 put is now 440 on this candle close. The 275 put is now 274 on the candle close. So your options here, your options on regular trades when it starts hitting the 1.5 level minimum required move, and at every level below that, once it's met the 1.5 level minimum required move, are either 100% close out all or adjust the stop loss on all to break even, or break even plus 10 to 15% profit buffer. Or if trading multiple contracts, now we're talking about options now, you can apply the same thing to stock that I'm about to go through. Or if trading multiple option contracts can scale out by closing out 70 to 90% of them, and on the remaining runners adjust stop loss to break even, or break even plus 10 to 15% profit buffer. Okay, so on options as an example, if I'm trading a 10 lot, 10 options, I can either close out all 10 options, take my profit, now I'm flat on the day. If I want to involve myself in another trade, then I'm open to do that. I don't have a live trade anymore. Or, instead of closing out all of them, at this point, I can instead adjust my stop loss on all of them to break even. So that would be now the price that you paid for the option. So remember, to begin with, on the initial entry, we're using a level as our stop loss. So for those that may be wondering how to do that with options, now obviously with stock that's easy enough. You just set a price level for that because you're just trading stock, so that's easy enough. However, on options, there's only some brokers that allow you to put a stop loss on options based on the price of the underlying, meaning what price is the underlying stock or ETF trading at, or in the case of XPX, what price is the underlying XPX index trading at. So two brokers that do that are Thinkorswim, and the other is Interactive Brokers. Now there are probably other brokers that also offer it. Those are the only two that I'm aware of, but I don't know everything about every broker, so your broker may offer it. A lot of them do not. It is a very useful feature, and they also offer where you can sell your options based on the price of the underlying hitting a certain price as well. So you can use it for stop losses, or you can also use it for take profits. So in the description of this video, there is a link to a YouTube video that we did not make, but is a very good video. So I didn't really see a need to make another one since this guy did such a great job of explaining it. In the Thinkorswim platform of how you can do that with options, place stop losses with the price of the underlying. So if you're with a broker that does not offer that, then you're just going to have to eyeball it and stop yourself out manually if price goes back and hits that price level. Obviously, you can set an alert for that price level on your TradingView chart. By the way, this indicator is only for TradingView. So even though we'll be showing you Thinkorswim option charts later, you're using this indicator on TradingView for your charting purposes and to base whether you want to make trades or not. You're making your trades through whatever broker that you want to use, whether that's Webull or Robinhood or E-Trade or TradeStation or Interactive Brokers or Thinkorswim or Fidelity or whoever. Okay, but as far as charting and the indicator and using the indicator is for TradingView only. So just want to make that distinction. TradingView is the largest trading platform in the world. They have several 100 million members. But okay, So look at that, and if you don't trade with Thinkorswim already, you might want to consider just getting a demo account and trying out that feature on a demo account, as far as being able to place option trades with a stop loss based on the price underlying of the underlying, and also take profits can also be based on the price of the underlying. Obviously, every broker has one where you can just base it on the price of the option. As far as interactive brokers, there's probably some YouTube videos on that. There's probably some Reddit discussions on that, or you can just ask interactive brokers support directly how to do that. So getting back to this, the point I was making overall is that you start off your trades with your stop loss based on a level. However, when you're doing your adjustment to break even, or break even plus a 10 to 15% profit buffer, now you're changing your stop loss to just the regular price based of the option, the price of the option stop loss. So for example, if we're just moving our stop loss to break even on the 277.50 puts, then our break even is what we paid, $2.45. If we're doing it on the 275s, it's $1.31. Or if we're going with break even plus a 10 to 15% profit buffer, that simply means that, as an example, if I paid $2.45, I want to add 10%, that's roughly a quarter, so now I'll make it $2.75 as my stop loss. $1.31, you could just round it off to 15 cents. It's actually 13, just over 13 cents is 10%. But when you're doing this kind of stuff, you just need to have speed, not get a calculator out and have to, it taking 20 seconds to figure it out, because a lot of times these things happen fast. So you think, okay, well that's basically, I'll just move it to $1.46, 15 cents. If you're going to do that. Okay, so if, for example, you had 10 put contracts, 70% of them is 7, 80% is 8, 90% of them would be 9. If you had 5 option contracts, then selling 4 of them would be 80%. The main thing is that you're selling the majority of them. You're not just selling half of them, you're selling the majority of them, somewhere between 70 to 90%. You're closing them out if you decide to go this route where you want to scale out and still have some runners. So it's either I close them all out at this level, or I keep them, I don't close any of them, I adjust the stop loss to break even, or break even plus a 10 to 15% initial profit buffer on all of them. Or if I'm trading multiple contracts, can scale out by closing out 70 to 90% of them at this price, and then on the remaining runners left, I adjust the stop loss on those to break even, or break even plus 10 to 15% profit buffer. Then, as price continues to move in your favor, now what do we mean by that? Well, remember we said normally you're starting off with a 1.5 level move, which would be if we had the midpoint here, but it's a 2 level move for this. Here is a 2.5 level move. At each half level increment is another decision point. Now, if you want to only look at it as 1 level move increments, that can be your prerogative, as long as it starts with the minimum 1.5 level move. So the ideal is 2 levels. The minimum on a regular trade is 1.5 levels. Everyone has a different trading style. We can just show you what the strategy is. If you prefer just to do it in 1 level increments, that's your prerogative. But it does start at the 1.5 level move as far as being the minimum. And the standard strategy is that after that first 1.5 level move, every half level move is another decision point at which you're either doing one of the following. Now, on this 935, where it hits the S2 level, that's a 3-level move. 277.50 put, now 535 on candle close. 275 put, now 380 on candle close. Now, the difference here in this note is that if you've already previously adjusted your stop loss at the previous level, then add additional profit buffer amount if not closing out. So that means whatever you've got left, whether it's runners, whether you still have all of them, or whatever that you already adjusted a stop loss on this one, you add more profit buffer every time it moves another increment ratcheted down in your favor. So it's level to level trade management. As it moves more in your favor, you add more profit buffer in your favor on anything that you have where you're still adjusting your stop loss. Or you just go ahead and close out whatever's remaining. If you just adjusted your stop loss on all your contracts here, then when it gets to the next ratchet down in your favor, then you either close them all out then, or you go through one of these steps here and use one of these options for managing your trade. Okay, so at 938, it hits the S4 level. So my apologies here for these two typo errors I made here. So my apologies for that. This should be 9:35 a.m. hits the S3 level. So my apologies for that. And at the 9:38 a.m. it hits the S4 level. So my apologies for that. I guess I didn't have enough coffee already when I was doing this, so when I was typing this out. So my apologies for that. But here the 277.50 put is now 820 on the candle close. So that's this candle here. And then when it hits S3 here, that's this candle close. The 275 put on here at the S4 level is 570. So again, as it keeps moving down. Now in this particular session today, we're going with one full level increments. Part of that is because there frankly just wasn't enough room to put several more of these notes on here. So that's one reason why on this, because of the velocity of this move and how many levels it went through. But normally, as if you're watching other videos, starting at the 1.5 level move, it's each half level move is another increment at which you have another decision point. So just keep that in mind. If you want to use just one level increments, if that's your prerogative. I'm just telling you how the strategy works in general. That's the best practice, is to make a new decision at each half level move in your increment, because you don't know where it's going to start reversing. You also don't know where exactly it may go to. It may go all the way down. It may have it's possible it could retrace the entire up move from earnings, of which case we'd be dealing with S10. So that's why, at some point, everything has pros and cons. If you're scaling out and keeping remaining runners, then you've already taken out a large profit, and now you're just adding on to it by managing the minimal amount of runners that you still have and trying to squeeze as much profit out of those. So that could be an excellent way of doing it, and that's why it's one of the different options. Another way is just continually adjust your stop loss on all of them and not scale out and just see how far it goes, and just keep adding more and more profit buffer, and let price eventually take you out when it eventually happens to retrace enough to take out your stop loss with all the added profit buffers that you added down. So okay, so you may have seen these other two notes down here, and I'll just briefly explain this. So this is for those people, how would I use this indicator for a bullish play on a day like this? Well, as we said earlier in the video, we do have a video that is on taking bullish and bearish trades off of the other main R and S levels, which is in the description of this video that you can watch. That was on the SPX Daily Key Levels indicator, but the same thing applies here. Excuse me. So if you want to watch that video, then you can also see how that is done in more detail, and then also the two different types of trade, as I explained earlier, the regular trade and also the more conservative trade entry, which takes more confirmations and how to recognize both of those. Okay, so this is an example of a trade. We had a long move out. It's starting to bottom out. We're waiting for a couple of candles at least to play out here. So this is whether you've already exited this. Okay, you could have exited anywhere along here, or you could have just not even taken this trade, and you could have just ignored all this, and you're simply just waiting for the Apple bounce opportunity. So there's no obligation to take the opening 9:30 trade. There's lots of people that use the indicators to just let the session play out a little bit, and then they decide what level they want to make a bullish or bearish entry on. And they don't like doing the opening moments trade, and every trader is different. There's nothing wrong about that at all. So everyone's different. A lot of people like having kind of an opening range to play out first before then making a decision. Sometimes, opening ranges, depending on the trader, could be the first 5 minutes, the first 15 minutes, the first 30 minutes, or it could be the first hour. So in any event, whether you took this trade or not, for whatever reason, or you did take the trade and you're out of it, there is a bullish opportunity here on this 9:42 a.m. candle. Now, jumping in right here is being just too aggressive, in my opinion. That's too aggressive of an entry because it's really kind of unclear with just one candle. Remember, these are 1 minute candles. So waiting to see at least a couple of candles to see if this looks like it's stabilized. And on the 9:42 a.m. candle here off of this S4, if looking for a bullish entry, then you would have the same situation as we talked about before. If you're looking for a bullish entry, the level is S4. The price is 269.71. The closest at the money strike is the 270. Since it's a bullish play, that's a call. The 270 call entry price on the candle close is $1.92. Now, as I mentioned earlier, a scalp only is a one level move in your favor, calculated as one level in the direction that you're trading from the level that you are trading. This is the level we're trading. We're trading bullish. We look up, one level is S3. So on at least a touch of S3, you're getting out. Now you can get out on the candle close after it's touched as well. It may retrace. Here you didn't have a retrace. These candles here, you had lots of follow through on a touch. So getting out in the candle close here, you're getting a better price on these than just getting out on the touch. So you have to keep that in mind. So the The candle close works both ways on exits. So sometimes you're going to come out with a lot better price waiting for the candle close, but just triggering that you're going to do something when you see it touch. So if you're just going to wait for the close, then wait for the close. But the main thing is that once it touches, then you know that that level's been activated, and you're either just going to get out in the close, or you're getting out after that touch sometime between the touch and the close, or just waiting for the close. And the close sometimes will be to your benefit, like it was here in these. Sometimes it's a little bit to your detriment, like it was here, where it actually touched and went off. But we're still going on the candle close here, as you see. And on this candle close, on the scalp only, moving from S4 up to S3, closing out 100%, the 270 call in the candle close is $2.90. So that is on 10 contracts, that's almost a dollar. It's 2 cents shy. So on 10 contracts, that would be 900 and let's see, 2,900, 1920. So it's $980 if I'm doing the math correctly. Okay, so that would be a scalp only, and that would be a wise move on this with this much of a move down. Nothing doing more than a scalp here, because we're already, showing the bearish bias. So this is kind of like a, level by level. The prudent thing to do is scalp here, get out. If you see it starts reacting well off of S3, some sideways movement, some good price action is going to continue to move up. You could take one off of S3, or you could wait for an S2 play or an S1 play. Okay, but on something like this, then you'd want to be more prudent with your bullish plays on something like this, and just mainly go scalp level to level. All right, so here what we have is a tally. Now, the options on Apple, especially since this is Friday expiration. So remember, stock options such as on Apple expire every Friday. So today is Friday, so today there's 0 DTE. So these are going to be a lot less expensive than they would be had this been Monday and there were still 5 days to go. So unlike SPX, where the options are usually fairly expensive for one option, here, for as an example, the at the monies were only $2.45, whereas the at the money on SPX in the morning could be $20 sometimes, and a lot of times it's somewhere between $10 and $15 just for one. So with this, we're using 10 lots. I realize that not everyone has an account to use 10 lots. Some people just might be trading one option or just a couple of options. But we're looking at this from people that would normally trade one SPX option, you would be trading 10 of these. And there are a lot of people that trade, in stock options, they trade 40 lots, 50 lots. Some people, trade 100 lots. So 100 lot on this would have been $24,000. 100 lot on, on that, would have been $13,000. But for 10, it's $1.31. So if you're not familiar with how options work, you take the price of the option times 100. That's your price for one option. $1.31 times 100, $131 per options. So that's $131 per put option for this 275 out of the money put. So for 10, it'd be $1,310. So here we have the different exits. So if you were 100% exiting on each level. So on a scalp, only, 100% exit, back up here, $590. Profit on a 10 lot. You're getting out $1.90, paid $1.31. Keep in mind these don't include any commissions you may be paying to your broker. Some people have commission-free brokers they trade with. Some people don't. So if you do have commissions, just keep in mind this does not include any commissions in or out. If you exited on S2, 274, the profit on a 10 lot, $1,430. On exiting at S3, $3.80, profit $2,490. 100% exit on the S4 level, $5.70, profit $4,390. On the at the money 277 put, the $245 cost per option, $2.45 each. Multiply that times 100, $245. For 10 of them, it's $2,450. 100% exit on the scalp only, one level move, $3.40, profit $9.50. Exit at the S2 level at $4.40, profit $1,950 on 10. 100% exit on S3 level, $5.35, profit $2,900. 100% exit S4 level, $8.20, profit $5,750. Starting with $24.50, generating a $5,750 profit on that $24.50 in the span of 10 minutes. Or taking $1,310 and generating a profit of $4,390 within 10 minutes. Remember here on the scalp, we had roughly $1. We paid $1.92. This is $2.90. If you just want to round it up and call it $1, that's basically on a 10 lot, $1,000. Okay, so what we're going to do now is we're just going to take a quick look at the Thinkorswim option charts for these two puts and the one call. Okay, so first we're going to take a look at the 277.50 put option. Remember, that was the at the money on the initial 930 close below the bull bear KPL. That was the standard play at the money. So here we have the $2.45 entry in the 9:30 a.m. candle close below today's bull bear KPL. Here is the 9:31 a.m. Candle close. This was the S1 level hit. Remember, that was just the one level move from the bull bear KPL to S1. So $3.40. Here's the S2 level hit, 9:32, $4.40. Here is the S3 level hit, 9:35, $5.35. Here is the 9:38 a.m. candle close S4 level hit, $8.20. Now we'll take a look at the 275. Okay, so here's the 275. This was the out of the money strike on the 9:30 a.m. candle close below the bull bear KPL. The buy price on this option, $1.31. Here is the 9:31 a.m. candle close S1 level hit for scalp only, $1.90. The S2 level hit, 9:32, $2.74. 9:35 a.m. S3 level hit, $3.80. 9:38 a.m. S4 level hit, $5.70. Now we'll take a look at the 270 call option for that one bullish play. Okay, here's the 270. Remember, this is the at the money S4, the at the money to the S4 level for that S4 bullish play. 9:42 a.m. This candle here. Remember, we were waiting for a few candles to make sure it was stabilizing. $1.92 entry, long entry S4 level. 9:49 close of the candle, $2.90. This is the exit at S3, one level move scalp from the S4 entry, bullish play up to one level to S3, one level move required for a scalp. All right, now we'll go back to the regular chart. Okay, so as we mentioned in the preview part of this before the video started, if you do have an interest in purchasing this indicator, you can email us at daytradinggps@gmail.com. And in return for you taking your valuable time to watch this video today, you can request a discount promo code that will give you a substantial discount off of the regular price of this indicator. Just simply email us at daytradinggps@gmail.com to request the discount promo code for the Stocks ETFS Daily Key Levels indicator. All of our indicators are sold on a one payment for lifetime access basis. That means you make one payment and then you have lifetime access to the indicator. They are not sold on monthly subscriptions or yearly subscriptions. You simply make one payment and then you have lifetime access. What that also means is that if we come out with future versions of the Stocks ETFs Key Levels indicator that have future enhancements or additional features or other updates, then since you have lifetime access, then you will receive that at no additional charge. We do have planned that we will have some additional features being added to this indicator in the future. At that time, the base price of the indicator will be going up substantially from what it is now once that new version is released with all the additional features. So if you get the indicator now and also apply the discount promo code that you get with the additional discount, then when any other future update or future enhanced release is put out, then regardless of what price that has been raised to, you will get yours at no additional cost. So you're grandfathered in at the price that you paid, and then you have lifetime access and free updates for life for any enhancements on this particular indicator. Okay, well, thank you for taking the time for watching this video today. And if you like this video, please hit the like button on the video. That helps us with the YouTube algorithm, so I'd appreciate that. And if you'd like to be notified when we come out with new videos, we will be making videos on our other daily key levels indicators as well. We have one for futures, and we also have a daily key levels indicator for Forex and crypto, and we also have one for the NASDAQ NDX index, which is for trading NASDAQ NDX index options, much like the SPX Daily Key Levels indicator, except this one is for the NASDAQ index. We also have suites available. We have a Platinum suite, which has all 8 of our indicators included, and we also have a Daily Key Levels suite, which includes all 5 of our Daily Key Levels indicators, the ones for SPX and DX, also the one for Stocks and ETFs, Forex and crypto, and futures. So if you do trade lots of different types of symbols, you might want to consider one of those indicator suites. However, if you only need one indicator for a specific purpose, such as the SPX or Stocks ETFs, then we do sell our indicators on an individual lifetime access basis as well. All right, well, thank you again for taking the time to watch this video, and thank you for helping out our YouTube channel, and we wish you a great weekend and wish you much prosperity in all your future trading.